Greetings from MWN.com. Dr.M.Wilson, formerly Vice Principal and Head of Department of Commerce, Scott Christian College, Nagercoil is delighted in presenting this session. Thank you. Please subscribe the channel MWN.com. Definitions of related concepts. The definitions of important related concepts of cost accounting are stated as follows. 1. Cost. Cost is the amount of expenditure incurred for the activities like production of product or for providing services. Costs are in the form of deferred cost and expired cost. Deferred costs are also known as capitalized cost, which provide benefit in the future period. Example: cost incurred for the purchase of fixed assets. Expired costs are those costs incurred for the present period only. Example: salary, electricity, rent, etc. 2. Expenses. Expenses means expired cost. It is the cost meant for the present period. Hence, expenses are the cost incurred for the generation of revenue for the present period and not for the future. Therefore, the deferred costs are not called as expenses. 3. Loss. When the revenue is less than the expense, it is called loss. If a fixed asset is sold for less than the present cost, it is also called loss. 4. Opportunity cost. The cost connected with the loss of an opportunity is called opportunity cost. Opportunity cost normally arises in the selection of one alternative from the various alternatives for an action. If the alternative selected is not the best, then the loss of not selecting the best alternative is called the opportunity cost. 5. Sunk cost. Sunk cost is the difference between the purchase price of a fixed asset and the realized value of the asset, if sold. It may also be stated that it is the difference between the book value and scrap value of an asset. 6. Differential cost. The difference in the total cost between any two alternatives is called differential cost. If there is an increase in cost from one alternative to another, the differential cost is called incremental cost. If there is decrease in cost from one alternative to another, then the differential cost is called decremental cost. 7. Imputed cost. Imputed costs are the costs which are measured or estimated for managerial decision making. Hence, the costs actually incurred are not called as imputed costs. Example: rent value of the owned building, interest on own capital, interest on internally generated funds, etc. 8. Out-of-pocket cost. Out-of-pocket cost means the cost actually spent for manufacturing a product. Hence, the cost of depreciation is not included in the out-of-pocket cost. 9. Shutdown cost. Shutdown costs are those costs which are incurred even after the stoppage of production or closing of a department. Variable costs need not be incurred after the stoppage of production. Hence, shutdown cost includes only the fixed cost.